Welcome to the Real Ones of Real Estate, the podcast where we dive into the heart of our community. This week, our hearts are with those who have been affected by the devastating wildfires here in California. Beyond the immediate loss, we know that these events have left many families facing the challenge of rebuilding their lives and finding a safe place to call home. In today's episode, we'll talk about resources that are available to those who have lost their homes, including how to navigate buying a home in this market, securing your credit, and finding permanent housing. If you or someone you know has been impacted by the fires, we are here to help. We're offering our services at discounted rates to fire victims. Together, we are here to help our community reshape and understand the housing market. Welcome to our very first episode of 2025. Enjoy the podcast. Be sure to follow us on Facebook, Instagram, and all the other platforms. Enjoy the podcast.
Hey everybody, this is Tamiya Robles. I'm your credit repair expert. I am the owner of FixMyCreditNow850.com. I'm also the president of NAREB's High Desert chapter out here in Victorville. I will be hosting our first podcast, and I want to say thank you for joining. Thank you for listening. Now, I want to introduce the ladies. First, we have our real estate agent, which is Britnee Keyes, and our lender, Ashlynn Johnson.
Thank you so much, T. Thank you, Tamiya, for the introduction. And thank you, Tamiya and Brittany, for agreeing to work with me to do this podcast. Super excited to share and teach people about how to get into their homes, how to make that purchase affordable.
Thank you, Tamiya, and thank you, Ashlynn. Of course, I am Britnee Keyes, the realtor. I also have a small business, Crazy Tacos, and I am first Vice President of NAREB. Thank you, Miss Tamiya, for pulling me onto HDR. I'm so excited for what we're going to do this year, and I'm super excited for this podcast. So let's get it started. So just to get jump into our first part of the podcast, we're going to be talking about what's happening in the real estate market for 2025. There's a lot to look at. There's a lot to break down, especially here in California with the fires happening, with, of course, the inauguration of President Donald Trump. We are looking at a lot of different variables, but nothing that has stuck yet as far as the real estate market. So of course, everyone has seen an increase in prices, right? Your eggs are $10. Come on now. So that means your home is going to be significantly more. We've seen it in the rental market, but we've also seen an increase in the home prices here in the high desert specifically. The prices continue to raise. Now, we do think that there's going to be a drop in the prices. We are hoping, fingers crossed, praying for a drop in the prices due to our new president coming into office, just to get this economy moving and things like that. But don't let that fool you, because we have seen an increase in home sales. So in the high desert alone, there was 341 homes sold last quarter. That's a big increase in inventory alone, because we had no inventory. Well, we had little to none in 2023, 2024. We've seen that number go up. A lot of people were relocating, moving to other states and other cities, where they are finding jobs and things like that. So there's definitely been an increase in 3-bedroom homes in the high desert alone. The market is still competitive. You still need to come in at about asking. Like with any market, the hot houses are going to sell. They might sell a little bit above list price if there's competition. And then there's also the homes that are less desirable. You can still put in a pretty good, you can still catch a sale, don't let that discourage you from buying a home. A lot of sellers need to adjust their expectations. We have seen price drops because people pricing high. And that's honestly, that's a seller expectation thing. They go out there, they see what's on Zillow, and they want that price for their homes. Me, as your realtor, I will navigate you through if the home is really priced correctly and what putting an offer in on a home that is not priced correctly looks like, because we don't want to alarm the sellers, but we also want to make sure that we're able to stabilize in this market, with the interest rates increasing and the home prices continuing to rise. It's just very important that we maximize any opportunity to get a return on our investment, on our initial investment. And when you look at your home like an investment, you are going to want to break down how much is it going to cost me monthly, what does it look like for me to buy in this market? And so those are very important things, but those things will be explained to you by our lender, Ashlynn. She is the one that kind of tells you what the impact is going to look, not kind of, she is the one that is going to tell you what these higher rates look like, what your affordability looks like. And I'm the one that's going to navigate you through the competition in the market. So definitely want to speak to and listen to what what Ashlynn has to say, because it's super important that you have your finances together and that you talk to a lender early in the process. Whether you're buying or selling, you want to speak to a lender to know where you stand. You want to speak with a realtor to understand the trends so you can make informed decisions. So you definitely want to be prepared navigating this market. There are some exciting things coming to the high desert. Everyone knows that I am a huge advocate for living, playing, and just loving the desert. I love it here. So some things that are increasing the attractiveness of the area. As we know, like we were talking about the fire victims, there might be a shift of people moving here because of the train coming. The train is going to take you from Vegas to LA. Amazon is expanding up here. I know Big Lots is building a warehouse currently up here, and other major business opportunities like with BNSF, going to Barstow. All of these new exciting projects coming to the high desert, along with the affordable cost of living. Yes, it's still affordable here. It's one of the last big California cities, and I say big because there are smaller surrounding cities that we can always help you to navigate and explore as well. But it's one of the last hot spots for investments. A common investment trend that we tend to see here is the purchase of single family homes. They're usually purchased as rental properties, and that kind of shifts your price point a little bit, but we shouldn't have to worry about that coming into 2024. We're seeing a lot of people kind of settle down on that end. Even the bigger investment companies, they're looking for properties that the average first time home buyer wouldn't be able to buy anyway, like cash purchases. But it's definitely a market to look out for. You definitely want to talk to Ashlynn early. You want to talk to Tamiya early. You want to get your finances in order. You want to get your credit in order. And to be prepared to do that, you definitely want to contact me, your favorite realtor, and we can talk about all of the trends in the neighborhoods, the hottest schools, the best places to live here, the best things to do. Our conversation doesn't always have to be strictly about buying a house, especially if you're new to the area. I want to be a trusted resource for you when you do move here so you get to know the community.
Thank you so much, Britnee. I feel like our interactions, our service to the community interact so closely because they do, like they're super parallel. And as Britnee shared, the importance of speaking with your lender, I want to start by saying a lot of people are kind of skeptical because nobody wants to hear those two letters that nobody likes. Nobody wants to be told no. And one of the things that I pride myself in as far as being a lender is we're not just going to talk about why I couldn't move forward if I can't. I'm also going to give you some actionable items and things that you have to do if this is a goal that you want to attain. I'm going to give you the tools and skills that you need to be able to get that pre-approval and to get that yes. Getting pre-qualified is extremely important because, like Britnee said, we're coming upon a time period where the market is going to start to change, and you want to be prepared. You want to have your numbers for your pre-qualification already in place. You want to know who you're financing with, what your rates are going to be, how much room you have to be able to offer. If that price is maybe within that budget for your pre-qualification or your pre-approval. And let's say there is a little competition and you really want this house. If you know what your numbers are, you can come into that conversation and say, okay, I'm pre-approved for 500,000. The purchase price or asking price is for 50. We're willing to come in and be a little competitive at 475 because you have that wiggle room to be able to really make that offer competitive and make it stand out so that the sellers know that you mean business and you're serious about getting into your property. You can't write that type of a check or write up that type of an offer without having spoken with the loan officer, spoken with your trusted financial advisor, and set up a plan so that you know exactly what your pre-approval is going to look like. You will also know at that point what that monthly obligation is going to look like. So your mortgage, your taxes, your insurance, and is this something that I'm really going to be comfortable to pay for the next 30 years? Or am I being unrealistic in my desires or my approach for this purchase? So let's start out with that pre-qualification. It is so much less of a hassle than you think. Everything is typically done online unless you feel more comfortable with meeting with me and we can walk through it together. Documents and things are usually signed electronically. Items are submitted digitally as well. And it just gives me the opportunity to review your income. I can do a soft credit pull that won't impact your credit score. And that allows me to tell you exactly how much we can apply for comfortably, as well as a few areas that we need to address. So if there's a credit concern, if there's questions about income or job history, those are things that we can discuss in the moment while we're going through that pre-qualification phase. And if we need to go back to the drawing board or there's more homework that needs to be done, then you have time to be able to do that at this point, right? Now, as far as interest rates, that's another really, really big concern right now because rates have changed recently. We're going to continue to see a decline in interest rates, especially after the inauguration. My spidey senses tell me that this is going to be how the new administration is going to award their constituents, is going to be coming in to have the rates lowered and encouraging more cost-efficient housing opportunities. And with that in mind, as a buyer, that means that that rate is going to potentially decrease and go down. That means that the demand for housing is going to go up because now purchasing that property is going to be more affordable. So what you've done at that point, if you're waiting for rates to go down, is you're putting yourself in a position where you're going to have more competition because now that the rates are lower, it's like, man, okay, rates are down. So I'm going to go after this property. Maybe I didn't want to buy, but now because rates are so low and I have a little money in the bank, I own my home, but I might even be able to like invest now because rates are so low, right? So you put yourself at a disadvantage. If you're just focused on the rates, there are plenty of options to be able to make that rate more affordable. I would always encourage you, let's focus on making that monthly payment the most comfortable and cost efficient for your budget instead of focusing primarily on the rate. The rate is important, but it's only one component of that transaction. Go with the rate where it is. Let's see how we're able to make that payment as comfortable as possible. And let's focus on making that purchase price as affordable as possible, which again, will buddy and partner with Brittany so that that way she can advocate for you and will work and research to get you the best price as it relates to the type of property that you want, right? The interest rate is also affected by the loan type. So when we're looking at pricing and the cost of your home, we also need to evaluate the type of loan that we're going to go for. And I know we have plans for future podcasts to kind of dive into the specifics for each type of loan, but just understand that your rate, if you're going in for your purchase FHA, that rate may be different from a conventional loan or for a VA loan. So, all of those factors are what we're going to discuss when we go over that pre-qualification. So, I'll be able to give you a specific time frame and dollar amount and structure that you'll be able to focus on for your pre-qualification. Actionable items and steps that I would suggest to ensure that you have the best possible outcome for financing are going to be just knowing your numbers. So, getting with Tamiya, understanding what your credit scores are and what your credit history looks like. It's going to be extremely important. I always tell buyers, the score is great. And we want to know what that number is so that we can gauge where we are in some areas of opportunity. But you want to focus more on the history. So making sure that those payments are current, make sure that you pay on all of your accounts, either, before the due date or on the due date, making sure that you're aware of what your balances are on revolving credit, making sure that you know the status of your accounts. Is it current? Is it delinquent? Is it over the limit? Right? So just being aware of what is on your credit history. Also, make sure that you control what you can when it comes down to your finances. So, changes in your financial situation, like job changes, moving bank accounts, opening new accounts, signing as joint signers on accounts for people authorized or co signing. You want to make sure that you really, really monitor heavily those things when you're getting ready to get pre-qualified, because all of those types of adjustments and changes can negatively affect your ability to get into your home. So just making sure that you're aware of what is on your credit and how your credit history looks is a huge component of that pre-qualification and making sure that you're financially ready and prepared. Lastly, also keep good records. Start a folder. I have buyers make a folder and put a sticky note on front, label it house, right? House folder. And you want to keep things like your last 30 days of pay stubs, your last 2 years of tax returns, your last 2 years of W 2s, anything financially related in that folder so that that way, when it's time for you to have that meeting and conversation with me, or if there's questions or follow up that are necessary for that pre qualification as we're going through the process, you already have a folder and you're already used to that process. You get paid, you print your pay stub, and you put it in that folder so that that way it's easily accessible and readily available for review and for access. And that allows me to be able to make that process smooth and convenient, and it makes it move faster for you because we're not having to wait for documents and things like that to be sent over. It's all readily available and right at your fingertips. So keep good records. Know what your credit looks like, be aware of your numbers, and make sure that you monitor and control what you can as it relates to your financial situation. So, with that being said, I'm going to pass it over to Miss Tamaya so she can share about our credit.
Excellent. Thank you. Thank you for that Miss Ashlynn Drayton-Johnson. I appreciate that. So yeah, just hopping right into the credit aspect of it all. So a lot of the common issues that people have credit wise when it comes to purchasing their home is they think they know what's on their credit report and they really do not. So or they have an idea and a lot of times it's not as bad as they think it is, or sometimes it's not as good as they think it is. So the the fact that you don't know means that it's a sign that you need a professional such as myself or the lender to do, like Ashlyn stated, a soft pull and figure out exactly what it is that's on there. That's number one. Another issue is, I'm going to be honest with you guys because somebody needs to, is money. You have to, everybody's services are different, but if you're going to pay and get your credit repaired, you have to be realistic about your time and have to be realistic about how long you want to give yourself to fix your credit. Keep in mind you didn't destroy your credit overnight, so it's not going to be an overnight process in a lot of cases. With me and my business, fixmycreditnow850.com, for the most part, I have ways to expedite the process, but at the end of the day, we are at the mercy of the credit bureau. So if you need a house yesterday and you have repos, child support, in bankruptcies, nah, you need to be more realistic. Give yourself time and also understand that it's going to cost you something. Now, along years ago, years way back when I first did credit repair and I worked with a mortgage lender, they used to say if they can't afford you, they can't afford the mortgage. So consider that. My prices are not sky high. I am one of the lowest in the game. I try to make it affordable enough for everyone with no excuses. But at the end of the day, it's still a business, and this is a service that we provide. If you cannot afford discounted services, okay, I've had people complain when I said it's only $100 a month, right? Like for a couple of months. I've had people cancel 2 weeks later because they said it was too much. Keep in mind you probably won't be able to afford a home. So you may want to check your finances and talk to somebody about that, right? I'm not a financial specialist. Another thing that is an issue, again, your lender, if you were referred over by a lender, some of the items, it's not the fact that they're on your credit report, it's how it's reporting. And the open debt is usually a problem. So let's say, for example, you have a collection or a charged off account and it has a balance. It's not supposed to be open. It's supposed to say closed, and the balance is not supposed to show. At least with the collection agency, with the charge off, it's with the original debtor, so they can report that, but it should be closed. A lot of times people have open debt, and credit repair can at least get that closed for you so you can, for the most part, get it pre-approved. That's that. And it saves time. Like credit repair, you guys have to understand you do not need a perfect credit report in order to get pre-approved for a mortgage. Certain things need to be reviewed, closed, certain cases deleted. I do follow the direction of the lender. If you were referred over, like for example, with Ashlynn, and if she says, T, I need you to get these items disputed and removed, then that's what I'm going to do. If not, then I'm pretty well versed. The majority of my clients are trying to purchase a home. I say about 80% of my clients are trying to fix their credit so they can get a home. So I'm pretty familiar with what needs to be removed and closed. And if I have any questions, I'll reach out to your lender just in case. If I see early deletions, I'm going to reach out to your lender and say, heads up, these deletions are coming off pretty quickly. I just want to make sure that we have everything removed accordingly to your liking. But yeah, that's what I see a lot of for the most part. Another thing though is because credit is such a an interesting topic. A lot of people, I hear this all the time. They don't teach us this in school. They don't. It's not meant for you to be taught in school. Why? So you can thrive and don't need things. You don't need, the government for anything or whatever. But whatever. What is interesting is the fact that no, they don't teach things in school. They don't teach credit repair in school. However, I do give free credit education so you can learn this on your own while I'm fixing it. You're educating yourself and you do not become a repeat offender, so to speak. If you do, it is what it is. This is a judgment free zone. So, one of the bigger issues too that I come across a lot is when people come to me, they're referred over, they're trying to purchase a home, they have the plan to buy the home, they're ready to break generational curses, all that good stuff. Problem is, they come to fixmycreditnow850.com. They start getting deletions. I start removing things that have been on their credit report, let's say for years and years, and they see their credit score go up. What I want to encourage everyone to do is to stay on your path. All right. I'm fixing your credit just enough so you can be pre-approved and get the best loan as possible. Some people get so excited that this is the first time in their life they've ever had good credit, or their adulthood that they ever had good credit, and they want to stop the home buying process and continue on with credit repair. And that, in my opinion, that's a no-no. And here's why. Because when you're trying to apply for different types of loans, it's a different type of credit process. So for example, credit repair process. So for example, just like I stated, if you're trying to apply for a mortgage, you don't need a perfect credit report. Some things just need to be closed out, or a few things removed, little tweaks here and there. But I have clients that are like, oh my gosh, you just fixed some of my credit. My score went up 10 points. Thank you. And then they go run out and try to, let's say, get a car. I get that all the time. Unless you plan on moving your family from wherever you're at now into your car, do not get a car. It depreciates in value. Okay. As soon as you take it off the lot, it's basically trash, right? And it doesn't build equity. None of that. There's no benefit unless you have no choice and you need it, but that's a whole different situation. What you want to do is stick to the script. Yes, your score is going to go up. Stick to the script. But when you purchase a car, they don't care about bankruptcies, collections chart. They care about your score and if you have the money, right? If you're trying to get business credit, so if you decide to stop the home buying process and you decide to get business credit, that's going to take much longer, especially if you have a lot to fix on your credit report. So just stick to the plan. Business credit, you have to have a perfect credit report. You really do. You can't have any too many inquiries. You can't have collections, charge-offs, none of that. So just stick to the plan, and we're here to do that. And one of the best ways to make sure that things are running as smoothly as possible, I work with your lender and your real estate agent. So that would be Mrs. Keyes and Mrs. Drayton-Johnson, for example. We would be your team. So we would encourage you. We update each other. We talk to each other. We include you. We answer any questions that you may have. And if you feel like you need to pause credit repair, that's fine. We discuss it, but let's just stick to the team part. Okay. Once we start going rogue, things get a little crazy, but, and then it just turns into a waste of time. But yeah. What else can I talk about? Lastly, tools and services that I provide. So I'm always going to give free credit education. Again, I explained why, because I don't want you guys to be repeat offenders if you don't have to. Another thing is, once you fix your credit, and you're pre-approved and you get into you're approved to get into your home, you want to maintain that home. You want to keep that home. So if you need some credit education, or you maybe want to fix your credit up a little bit more, you can definitely schedule a consultation with me again. We can talk about it and we can make a longer term plan. Okay. I offer trade lines. So sometimes people don't need credit repair per se, they need their score increased and they may need a jump in score. So I'm not going to explain in this episode exactly what trade lines are. If you're interested, definitely just reach out to me. And I will explain more what trade lines are without a problem. But it's an excellent source, an excellent way to jump start your credit score. I mean, I've seen credit scores go from 400 to 800 in 2-3 weeks, depending on what's on your credit report. So it's definitely good. Another thing, rent reporters. If you're renting, I have a link for, I'm partnered with rent reporters, and now they officially report on all 3 credit bureaus. Get with it. Like, that's a trade line within itself. It belongs to you. And as long as your lender is okay with that and it's not affecting your debt to income ratio, get on rent reporters. Okay. Get on rent reporters. But yeah, I'm not going to keep you guys, but definitely just keep listening to our podcast for as a tool, because we are offering knowledge and education. So that's just another form of a tool and a benefit for you guys. But other than that, that's all I have.
I would just want to add to that, you guys, my client that just purchased her home, which is also my mother-in-law, she used rent reporters. You guys, listen to the information, make sure you follow the information. And then I also wanted to just chime in and say, like, as far as your credit qualifications and things like that, definitely jump in our inbox and ask us questions. It's okay to ask Tamiya, how much credit do I need to qualify for a mortgage exactly? And so she might refer you to Ashlynn or to myself, but jump in our inbox, ask us these questions so that we know the tools to give you guys. But major key on that rent reporters, because my mother-in-law was big on her, like, oh yeah, I use rent reporters. And I was like, awesome. I've only heard about that through Tamaya. So yes, it's actionable and it definitely works, y'all.
Well, if I could also say, and thank you for that, anything pertaining to finances, money, how much such and such, that is wholeheartedly a Ashlyn question. Okay. Anything credit will more than and you know what, Ashlyn, as a lender, can speak on credit as well. Maybe not in full detail per se, maybe so, but anytime. I mean, I don't care in interest rate, because people, what happens is they get comfortable with me, and I love it and respect it so much. And I appreciate the fact that we're developing a tight knit relationship and partnership. But the reality is, I'm not a lender, I'm not a real estate agent, and I get that all the time. If my credit score gets to this number, how much does it save me? I don't know. Let's ask Ashlyn. What is the best housing market or whatever? I don't know. Let's ask Britnee. I don't even know how to properly like ask the questions, but I get these questions. So I'm here to tell you the reason why we come together is we all stay in our lane. Like, we've mastered our own lane. So yeah, don't ever get offended if you ask me a mortgagee question. I call it a mortgagee real estatey question.
That's
I
hilarious.
can't do it.
I was gonna say, just FYI, any self-reporting does not affect your DTI. So it helps your FICO score, which is what we need. But at the same time, I don't have to include that in your DTI to get you what your approval number would be, your magic number to buy your home. So, and I love a mortgagee question because that's what it is.
Yes, yes, yes.
I love that term.
Thank you. Thank you. Okay. So right now we're just gonna recap. We'll just each say something quickly just to recap what we do, what we just talked about, and then we'll go from there. Brittany, do you want to start us off?
Of course. So, the first thing that you want to be looking out for in this market, because that's what, just to recap about the market, you want to look for stabilization. When you're searching for these homes, you want to know what your price point is, and you want to look inside of a market. For example, the Victorville market, three-bedroom houses, the average price around 450,000. If you are pre-approved for 500,000, you definitely, that's your market. So you want to look for those price drops. You want to look for the developing areas. So you'll know, you can kind of calculate in your mind, okay, I have this much time before, this comes or that comes, and it starts to raise the price, because as we grow here, the prices will raise, and that's a good thing for you if you buy, because of course you'll have equity. So you definitely want to look for stabilization. You want to make sure that you're paying attention to what is going on in the market that you plan to buy in, and how that market is moving, whether prices are dropping or prices are rising. With interest rates dropping, prices rise. So that is the key takeaway. There's still a low housing supply. It's still a competitive market. So you want to be prepped and ready to go.
What are you waiting for? Don't wait. Statistically, timing, like now is literally the best time. The closer you get to summer, the more chaotic it gets. Tax season gets very busy. The spring gets busy. Summer, everybody's trying to get the kids settled before school starts. Like, jump in now while it's cold. And I know nobody really wants to move because it's cold outside, but now it's the time to do it. You're going to get your foot in the door before a large portion of the market. Okay. How much credit do you need to qualify? You have to call me to find that out. That only comes through an individual one-on-one consultation, which is completely free. You guys can find me. We'll be sure to share contact information so that way we can connect. And I am available to do in person, virtual, over the phone, whatever it takes to get you your specific structure and guide to get you into your home. Okay.
Excellent. And then on my end, the credit repair side, listen, talk to your real estate agent and your lender first. If you do not have one just yet and you come straight from me, or you're coming to me first, let's see what is actually on your credit report. You never know, you might be ready. I've had plenty of people come to me needing credit repair, swearing up and down that it was necessary. I look at their credit report and I know there's nothing on there. They have a high credit score, and then boom, they're pre-approved that same day. So let's definitely check out. Be sure to know what's on your credit report. Okay. Make sure you're realistic about your time. If you have a messy credit report, at least give yourself a bare minimum of 90 days. I work pretty quickly, but we are at the mercy of the credit bureau. And also make sure you can afford, you have money set aside for credit repair, and just be sure to educate yourself so you're not coming back, and that you can maintain the house that you're going to be pre-approved for, and enjoy the ride. Okay. Enjoy the ride. It's never as bad as you think it is. I've been in the credit game for about 6 years, and I can name on one hand how many horrible credit reports I've seen. So you guys got it. All right. So now I'm going to wrap this up. We are going to wish you guys all the good luck. Be sure to like, comment, share, subscribe. Be sure to check us out every Wednesday for a new episode. If you want to talk about anything and want us to talk about anything in particular, just let us know. Our information is in the description. Reach out to Mrs. Keyes, Mrs. Ashlynn Drayton-Johnson, or myself. We got you covered. Thanks for joining us, you guys.
Bye.